The advertising industry is one of the more attractive industries for investors right now, not only because of its size. It was estimated to reach $917 billion in global revenue in 2024, but also because of the tailwind of increasing targeting abilities. Marketers that can increase the return on investment as a result of targeting specific customers that are most likely to be buying customers of the business are willing to spend more money to influence the decisions of those buyers. So, for that reason, I like the advertising industry as one to invest in for the long term. And in that regard, I'm going to highlight 5 undervalued advertising stocks you can buy today and share with you my proprietary discounted cash flow models for these 5 companies, demonstrating why I believe they are undervalued.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
But before we do that, let me share with you the industry forecasts for advertising for the next few years and historically. So, according to Statista, in 2024, global advertising spending reached $917 billion. That was an increase of 8.5% year over year. What's more, the industry is forecast to increase, surpassing $1.17 trillion by 2028. And I would forecast that the advertising industry continues to grow at a rate that's faster than inflation for the foreseeable future. And that's because more of the people spending money nowadays is going to products that are supported by advertising. Without advertising, entire industries would suffer significant declines in revenue. One of those industries would be the automotive industry. Cars have a lifespan of over a decade and over 100 or 200,000 miles, but people continuously trade in or upgrade their cars only after 2 or 3 or 4 years of usage. And that's because they see an advertisement for a car that attracts their attention and they go and they trade in their car. So without advertising, people would keep their cars for much longer. And so that's an industry that's strongly supported by advertising spending, and more industries are growing that are dependent on advertising. So let's start with the giant in the advertising industry, the company that generates the most revenue from advertising in the United States and arguably worldwide, and that's Alphabet. Alphabet, the present value of all of the free cash flow I expect Alphabet will generate between today and the very long run approaches $2.4 trillion. Alphabet generates over $200 billion in annual revenue, almost all of it derived from advertising. The company's weighted average cost of capital I applied here is 10%. And what you're looking at is my proprietary discounted cash flow valuation model for Alphabet, and I've done these for hundreds of companies. And you can get access to videos that describe these step-by-step calculations for dozens of companies if you join my channel as a member. So the intrinsic value per share I calculated for Alphabet is over $204, and the current market price is a little over $177, suggesting that Alphabet stock is undervalued at the current market price. I own Alphabet stock, and I'm also interested in adding more Alphabet shares to my portfolio. I like the company's position. I'm okay with the risks it faces right now, which most significantly is the threat from consumer search behavior shifting to large language models, which Alphabet may not be able to monetize as well as it's monetizing the current search on traditional search engines. The next company I'm going to highlight as an excellent advertising stock to buy is Pinterest. The social media company increased its total monthly active users from people in the United States and Canada, which is the most important market for advertisers. People in the United States and Canada have greater purchasing power than in any other part of the world, especially if you exclude Canada and just include the United States. And so marketers are willing to pay higher prices to influence the decisions of people in the United States. And so for social media companies like Pinterest, growth in that region is the most important region. and it demonstrated excellent increases there. The present value of all of the free cash flow I expect Pinterest will generate between today and the very long run is just under $44 billion. The weighted average cost of capital for this company is just under 10%. The intrinsic value per share is over $75, and the current market price is $34.75, which reveals a significant upside from its current market price today. The next advertising stock I'm going to recommend is Snap. The present value of all of the free cash flow I expect Snap will generate between today and the very long run is just over $42 billion. And the weighted average cost of capital I apply to Snap is over 8.4%. That's even after I apply a 25% increase to the company's beta to adjust for the fact that the company is a little bit riskier than the other companies I'm highlighting here. I'm not as fond of Snap's management team. And so, because of those headwinds and because of those risks, I incorporated a higher cost of capital for Snap. But even after I incorporated that higher risk for investing in Snap, the stock still looks undervalued at just over $8.55. The intrinsic value per share I calculated was $27.77. The next advertising stock I'm highlighting here is Reddit. And as you notice, I recommended three social media companies here: Pinterest, Snap, and Reddit. And I really like the user generated content business model, which is how social media companies operate. Users like yourself and myself create content that creates engagement that allows these companies to show advertisements to people that are browsing these apps. And so that user generated content is almost free for the companies, and they generate profits from people engaging with that content. So I really like that business model, and you can understand why I recommended three of those companies as a buy here. The present value of all of the free cash flow I expect Reddit will generate is over $22 billion. The weighted average cost of capital is higher than the rest at 12.8% because Reddit is a smaller company, it's growing much faster, and given that smaller scale, it's a little more risky than the other more established social media companies. The company's beta is much higher as well. The intrinsic value per share, even after incorporating that higher cost of capital, is over $183, with the current market price at over $115. Reddit is also attracting users from the United States and Canada better than Snap. Out of the three social media companies, Snap is doing the worst in attracting users from the United States and Canada, the most important market for social media companies. Reddit is arguably doing the best, adding the most users from that region. It's growing the fastest. And last but not least, might be a surprising addition to advertising stocks because you don't usually think of Amazon as an advertising company, but Amazon's ad revenue is approaching $100 billion annually and growing at roughly 20%, gaining market share over other rivals, other larger rivals, as of course, advertising is very attractive on Amazon's platform. They have hundreds of millions of monthly active users going onto the platform to shop, and they already have a payment method on file, and they're one click away from making a purchase. That's arguably the closest you can get to influencing the purchase decision for any marketing avenue, right? For a marketer, you can, if you show the right advertisement to a user on Amazon's website, in one click, they can make a purchase. There's arguably no other place where you can show an advertisement so close to the purchasing decision. That makes Amazon very attractive for marketers, and it's one reason why Amazon's advertising revenue is soaring and it's gaining significant market share. The intrinsic value per share I calculated for Amazon is $233. The current market price is $213 per share. So these five advertising companies or ad supported companies are some of the companies that I find to be very attractive. In fact, out of these five, I have three of them rated as the best 9 stocks to buy overall in 2025. And those include Amazon, Pinterest, and Alphabet. That's how much I like the advertising industry and these three stocks specifically. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.